Inflation rates are at record highs over the past couple decades, interest rates are on the rise, and the stock market's crashing. What am I doing in 2023 to prepare myself? Hey guys, this is Bradley Talks Money, and today we're going to talk about my investing strategy and plans for 2023 as we navigate through these somewhat uncertain markets. So I want to start by going over my outlook for 2023, where I think the market's going to go, and what I think of the current state of the markets. Now in 2022, we saw quite a big decline over the course of the year, and in January alone, we've managed to make up some ground. As of the end of January, stocks are sitting up 7%, which is kind of nuts considering the drawdowns that we've seen so far. Now, personally, I'm not entirely sure that we're out of this yet, and I don't think that the rallies in January were necessarily warranted. Now, like I said at the top of this video, interest rates, they're still going up. Now, I know Bank of Canada has declared a pause, but if we look at the States, they still mention that there's going to be at least 2 more coming. Inflation rates are still at record highs over the past couple of decades, and they're just starting to show signs of weakness. If we look at employment rates, they haven't really started to come down, which is also kind of a cause for concern. As much as I might not like to say it, part of fixing the economy right now is causing people to lose their jobs.
The Fed cannot stop until we have major job losses.
Now, the reason for that's pretty simple. If people don't have jobs, they don't have income. And if people don't have income, they can't spend. And if people aren't spending, then inflation goes down. Now, the 2023 rally that we've seen so far, I'm not entirely sold on it being warranted, and I'm pretty skeptical that it's going to remain this way. If you look at a lot of the major banks and what their expectations are for the year, they're anticipating a total return over the course of the year around 4, maybe 5%. So the fact that we've already increased past that shows a lot of indications that we're going to be coming back. Personally, I feel like the current market movements are based mostly on emotions rather than on the financials. When we see the Fed or the Bank of Canada saying that inflation's coming down slightly, you see massive rallies that aren't really based on anything. If you actually pay attention to the earnings reports and the forecasts that companies are giving, a lot of them, at least the companies that I'm watching, have negative guidance going into 2023, and they aren't really sure what to expect, and they're not super hopeful. Nobody's expecting record high earnings or breakout revenue increases. Everyone's kind of dealing with lowering debt levels so that the higher interest rates aren't really impacting their bottom line. Now, I want to go over my plans for 2023 that I think are going to help position myself well to have some pretty substantial gains in the next coming years as we hopefully navigate through this high inflation market. Now, before we even get into that, the most important thing that I think about when it comes to positioning myself well for the future is paying down debts. And this is especially important in high interest rate times like what we are right now. Some credit cards are upwards of 25%. I know car loans are kind of getting out of hand. So before you even think of investing, I think that it would be best to pay down those bad debts, if you will, anything over 6% especially. Get out of those positions because they're just going to hurt your overall returns in the long run. Number one, the first thing I'm working on is building up an emergency fund. This isn't really something that I've had because of personal circumstances recently, but building an emergency fund is incredibly important. Typically, it's important to have at least 6 months worth of expenses that you could use as this emergency fund if you were to lose your job or something bad were to happen. Say your car breaks down and you need to replace it, you name it, this emergency fund is there for that reason. The second thing I'm doing is building up a cash position so that if there is further market declines, I can capitalize on that. Currently, I believe I'm sitting at around 5-6%. I'd like to see that somewhere around 10. That would just give me the peace of mind knowing that I could capitalize on market drawdowns if the opportunity presented itself. The third part of my investing strategy for 2023 was capitalizing on high interest rates. Now, how can we do that? Personally, I looked at interest rates and how I could use those to my advantage, and I found myself looking at GICs, in fact. Now, GICs is a tool that most banks will offer, and essentially what it is you're lending your money to the bank, and they're going to give you an interest rate based on that. Now, when I was looking at GICs, I actually noticed that TD had a promotion on where if you opened a new tax-free savings account or RRSP with them, up to a maximum of $3,000, you could get $150 as a sign-up bonus, essentially. So when I went to TD, I looked at the $3,000 investment with a interest rate return of 5% and a $150 bonus for signing up. The 5% plus a $150 bonus, you're looking at a 10% return guaranteed on a $3,000 investment. And in the current markets where everything's kind of up in the air, there's a lot of uncertainty, I'll take a 10% return guaranteed any day. The fourth thing that I think is very important right now with high inflation is lowering your expenses, whether that be cell phone bills, internet, canceling subscriptions, paying down credit card debts, like I said. Doing whatever you can to lower expenses will simply help you have the peace of mind knowing that you're not living paycheck to paycheck and you have the ability to put some savings aside. The fifth thing that I'm doing, and this particularly pertains to my investing, is I'm trying to identify companies that have low debt and are trading below intrinsic value. And what that means is essentially I'm able to buy a company that's trading on sale at a deep discount. A good example of this might be Algonquin Power. We recently saw a huge sell-off. I'm not saying go buy AQN. It's got a lot of issues. It's got really high debt. Now, the high sell-off does present an opportunity if you do believe in the company in the long term, but I would highly recommend before investing in anything, you have a high understanding of what the business actually does, and you know for a fact that you're buying it with a large enough margin of safety. The same can be said for the opposite. If I see that some of my positions are trading well above their intrinsic value, meaning it doesn't really make sense for them to be that expensive, I might be trimming down those positions just to lock in some of the gains, because with this year, we can never be too sure that it's not going to see another sharp decline. The last thing that I'm focusing on this year is educating myself. I'm still pretty new to investing. I have a pretty good idea of what I'm doing, but I can always learn more. So the way that I'm doing this is through podcasts, books, research, whatever, you name it. Now, a couple of the books that I'm reading this year that I think are going to be very beneficial to me in the long run are The Intelligent Investor by Benjamin Graham. This is essentially the Bible of investing, specifically value investing. It'll teach you everything you need to know about the markets and buying things below their intrinsic value and selling them above. Ben Graham taught Warren Buffett how to invest, and I think we all know the incredible amount of success that he's seen. So being able to have access to that knowledge is priceless. The next book that I'm looking at is One Up on Wall Street by Peter Lynch. This is a really good book. I've read it once before. I want to read it again this year, but it helps find companies, helps you to identify where you should be looking in the markets, figuring out trends, looking at how to have the advantage on Wall Street, because it explains how Wall Street invests and how you should do the opposite. And the last book that I would recommend, Rule 1 by Phil Town. Phil Town is another value-based investor who follows the styles of Warren Buffett. I've been really into his content recently. I would highly recommend looking him up, doing some research. But he teaches rule number 1, like the book says, and that's simply don't lose money.
The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule, and that's all the rules there are. I mean, if you buy things for far below what they're worth, and you buy a group of them, you basically don't lose money.
Through this book and a couple of his other books, he teaches you what that means, how you can do that, and how to get significant gains. I know Phil Town is not as popular of an investor, and not a lot of people know about him. But his claim to fame is he was able to turn $1,000 into well over $1 million in the course of 5 years, all through doing the investing styles of Warren Buffett. So I think the key takeaways as we look forward into 2023, we make a plan on our investments and our finances, is to build that emergency fund, make sure you have a backup plan, because we can't predict what might happen with our jobs or emergencies down the road, and make sure that if we are going to invest, we're investing in companies that are solid and have a large enough margin of safety that our downside is pretty minimal. We really want to protect ourselves this year. We don't know what could happen. Markets are very uncertain, so we want to do our best to make sure that we position ourselves to succeed going forward. If you made it this far in the video, thank you. Please consider hitting subscribe. I'm planning on building out the channel here to look at your finances, your investing, debt, anything money related that maybe you didn't learn in school or maybe you didn't talk about growing up, because I think financial education and having the conversation about finances is incredibly important, and it should be a staple in everyone's lives. I wish you all the best in 2023. Fingers crossed we don't get burned too bad, and as always, stay safe out there.